Hey CMA buddies, let's today look at a topic called as commercial paper. And this commercial paper is a part of your module 6.6, and there are certain sources of working capital finance. Now these financing can be done through various modes. This can be trade credit, this can be bank credit, there's a concept called as factoring, and the fourth one is commercial paper. So here we are going to discuss about commercial papers, right? Let's start with the topic right away. Now, as you know, as I've already told you that it is one of the sources of the working capital finance. So what exactly is a commercial paper? It is basically an unsecured. That means there is no security as far as the commercial paper is concerned, and it's a money market instrument issued in the form of promissory note. Fine, so that is commercial paper. So it's basically an unsecured money market instrument. That means there is no collateral given, as in there is no security given when you issue a commercial paper. So it's basically an unsecured money market instrument issued in the form of promissory note. Promissory note is nothing but wherein a person commits to the other person or promises the other person that a certain payment will be made to him. So that's what is promissory note. So commercial paper is technically an unsecured money market instrument. So you should know it's an unsecured money market instrument issued in the form of promissory note. So these are the three keywords that you need to remember from a commercial paper point of view. Fine. Okay, there are certain features which are associated with commercial paper. So what are they? First of all, it has a maturity period which usually ranges from 91 days to 360 days. 91 days, approximately 3 months, to 360 days, that is almost 1 year, right? So basically its maturity period ranges from 91 days to 360 days. It is sold at a discount from its face value and redeemed at its face value. That means if say the commercial paper value is say 100 rupees, fine, but it will be issued at a discount of 96 or 97, fine. So the balance 3 rupees that you have, that is 97, or balance 4 rupees that you have, that will be the interest that will be earned by the security holder, right? The person who's buying the commercial paper. So basically a commercial paper that is a value of 100 rupees will be issued at 96 or 97. So the 3 rupees margin that is there, that will be basically the yield or the interest for the security holder. Fine. It is directly issued to the investor who intend to hold till maturity. So basically it is directly issued to whom? To the investors who want to buy the commercial paper and who have the tendency or who want to hold the commercial paper till the maturity. Fine. Okay, please remember there is no well-developed secondary market for commercial paper. Very unlike equity, there is no developed market or developed secondary market for the commercial paper. So it is directly issued by the issuer and it is purchased by the security holders. So it's more of an IPO kind of thing, that is initial public offering. Fine. Okay, what are the various criteria? What is the various criteria for its eligibility and use? Now RBI regulates the issue of commercial paper. So if the question asks you who regulates the issue of commercial paper, it's basically RBI. Now companies are allowed to issue commercial papers having certain criteria. So they have to meet certain criteria to issue commercial papers. What are these? First of all, they should have a net worth of rupees 5 crore. 5 crore is what? It is 50 million. Rupees 50 million, right? So they should have a net worth of rupees 5 crore, or what we say as rupees 50 million. Fund based working capital limit of not less than rupees 5 crore. So basically a fund based working capital limit should be there that is not less than rupees 5 crore. So first of all, there should be a net worth of rupees 5 crore. The company should have a net worth of 5 crores, and there should be a fund based working capital limit of not less than 5 crores. So 5 crores and above the company should have as a fund based working capital limit. If it is below that, commercial papers cannot be issued. Firms should be listed. It should be a listed entity, and they are required to obtain necessary rating from the credit rating agencies. So they have to obtain the rating from the credit rating agency. So in order to issue any kind of commercial paper, they should have a net worth of rupees 5 crore. They should have a fund based credit limit, working capital limit of not less than rupees 5 crore, and firm should be listed, and they are required to obtain necessary rating from the credit rating agencies. Other than that, they should have a minimum current ratio of 1.33:1. Fine. So there should be a minimum current ratio of 1.33:1, and all the issue expenses will be borne by the issuing company. So when you are issuing a commercial paper, whatever issue expenses are there, that has to be borne by the issuer company, right? Okay, moving on. There's a working group called as a Vagul working group. Now they recommended the size of single issue should be at least 1 crore. So when you are issuing commercial paper, then the size of it should not be less than 1 crore. and size of each commercial paper should not be less than rupees 5 lakhs, right? So the total investment value or the total level of issuance of the commercial paper should be 1 crore, and each issue should not be less than rupees 5 lakh. Now this is as per whom? This is as per the Bagul working group, whereas the RBI has said that minimum issue should be of rupees 25 lakhs. Right, so I hope you understand the difference. Bagul committee recommended that the single issue should be at least of 1 crore and size of each CP should not be less than 5 crore, whereas the RBI has provided that the minimum issue itself should be of rupees 25 lakhs. Fine. Okay, what is the maturity period? Presently, commercial paper can be issued for a maturity period between minimum of 15 days and maximum up to 1 year from the date of issue. Right, so basically the issue period or the maturity period should be minimum of 15 days. So your maturity can be of as low as 15 days, and it can go as high as 1 year. Right. Okay. What are the various costs that is associated with the commercial paper? Though RBI regulates issues commercial paper, right? We have already read that RBI is the body or the entity that regulates the issuance of commercial paper. Market determines interest rate. So the interest rate is basically market dependent. So whatever the market determines, that would be the interest rate of the commercial paper. But the regulation is done by whom? The regulation is done by RBI. The cost of commercial paper in India includes the following components. So what are the various costs that are associated with the issuance of commercial paper? First of all, it has to be issued at a discount. Fine. Secondly, there is a rating charges, stamp duty. So you got to get a rating. For that, there is a certain amount of stamp duty that is associated. So that is again a secondary cost. And thereafter, there is something called as an issuing and paying agent charges. What is that? Basically, financial institutions that acts on behalf of issuer. That is the company who is issuing the commercial paper. Certain financial institution basically act on behalf of them, as in they are the one who take the initiative and they issue the commercial paper on the behalf of the company and make payments to the security holders. So at the time of maturity, even the payment is done by these financial institutions only. So basically these are the three types of costs that are associated with the commercial paper. So first of all, the discount that it is issued at. Secondly, the rating charges, stamp duty, and thirdly, issuing and paying agent charges, IPA charges. That's what we call. Okay. Now we should know how to compute the interest rate of a commercial paper, right? So interest rate on commercial paper is less than the bank borrowing rate. So that's the biggest advantage of issuing a commercial paper. So if a company goes to a bank and take some loan from them, then that would be at a higher rate. So rather than taking a loan at a higher rate, they would rather prefer to issue commercial paper and raise money out of that. A firm does not pay interest on commercial paper, rather it is at discount rate from the face value. That is something we have already discussed. So basically it's not that 100 rupees face value commercial paper will be paid at 103 or 104. No, that's not the case. Always the issue price will be less than the face value. So that is the margin that the security holder will make. So either it will be issued at rupees 96 or 97, and the margin, that is 3 or 4 rupees, eventually will be the interest that the security holders will be earning, right? So what the interest that we earn on the commercial paper is called as a yield, right? How do you calculate yield on commercial paper? It is basically the face value, right? The face value, that is say rupees 100 minus sale price. Sale price, as we have already discussed, it would be lesser than the face value. So say 96 rupees divided by the sale price. So we always calculate the returns on the base. So the base price here is 96, that is the issue price, into 360 days. Why 360 days? We assume the year to be of 360 days for calculation purpose. So generally, whenever we calculate the interest on a commercial paper, we assume that the number of days in a year is 360 divided by the days of maturity. So say if a commercial paper is of say 90 days, then 90 days will be the days of maturity, right? So technically this tell you that basically we calculate the return on a day basis. So whenever a commercial paper is issued, it will be issued for say 90 days or 120 days, but we need to calculate the interest on an annual basis. So for calculating it on an annual basis, we multiply it by 360 and we divide it by the number of the days of maturity, right? So what is the formula? It is face value minus the sale price divided by the sale price, or you can even say the issue price, into 360 days divided by the days of maturity, right? Let's look at an example to understand it in a better way. Now for example, the example says, suppose a firm sells 120-day commercial paper. So the days of maturity is given as 120 days. Fine. And it says it is a rupees 100 face value for rupees 96 net. That means the sale price is rupees 96 and the face value is rupees 100. What is the interest yield calculation? Right? How do you calculate it? Yield is very simple. As we already discussed, it is going to be the face value minus the sale price divided by the sale price into 360 and the date of maturity, days of maturity. What is the number of days of maturity? It is 120. So if you just simply calculate, you will get it as 4 divided by 96 into 3. So if I just simply cut this, it will get this as 3, and it should be what, technically 4 by 32, or I can say this is 0.125, or I can say this is 12.5%, right? So this is how I am supposed to calculate the yield on the commercial paper, right? Now supposedly there is a marginal tax rate of 35%. What is the interest yield? If there is a tax, then simply this 12.5 has to be subtracted with the amount of tax, that is 1 minus 35%. So if I just look at this, this should be 12.5 into 0.65, or I can say it should be 0.813, or I can say it is 8.13%. I hope you understand, right? So that's how you calculate the interest on or the yield on the commercial paper. Let's look at a question that is there in your book. It says XYZ Limited issued commercial paper as per the following details. Fine. Date of issue is 17 December 2022 and the date of maturity is 17 March 2022. Size of the issue is rupees 10 crores. Number of the days is rupees 90 days. So basically date of maturity is given to me. Days of maturity that is given is 90 days. Fine. And it says interest rate is 11.25%. So I am being given the interest, or what we call as an yield, of rupees 11.25%, and face value is rupees 100. Face value is rupees 100. What was the net amount received by the company on issue of the commercial paper? So the net amount received by the company is what? The issue price, right? So the issue price is nothing but issue price is something we are supposed to calculate. So what is the formula? Formula is yield is equal to face value minus selling price divided by selling price into 360 divided by the days of maturity. Issue price and sale price is one and the same, so not to get confused. So if I just simply calculate this, yield is given as how much? This is 11.25%, or I can say 1125, right? Is equal to, I can say face value is how much? Face value in the question is given as 100. Fine. Okay. So if I take this as 100, then 100 minus selling price is something which I am supposed to calculate. So SP divided by SP into 360 divided by number of days of maturity is what? It is 90 days. Fine. So it is given in the question. So that is 90 days. So now we'll just calculate this. This 99 you can cut off. It will be 4. So if I just, and this SP can be transposed here, right? So it should be 0.1125 SP is equal to, this 4 needs to be multiplied with this. Fine. So 4 into 100 is 400 minus 4 into SP is 4 SP, right? Now if I can take this 4 SP here, yes or no? Then this 4 SP plus 0.1125 SP is equal to 400, or I can say 4.1125 SP, that is the selling price, is equal to 400. If I just calculate this, SP is equal to 400 divided by 4.1125, and the value here would be 97.26. Fine. Now this is the issue price. So what was my face value? Face value was rupees 100, whereas my issue price is rupees 97.26. Now basically it is given in terms of what? The question is asking you what is the net amount received. So it is not asking you the sale price, it is asking you the net amount received. Okay, now you see the size of the issue is what? Size of issue is basically 10 crores. Fine. Okay, now what do? I need to convert it into crores. Yes, so 97.26 is the value that I have. Now this 97.26 is on how much? It is on rupees 100 face value, right? But the value that I need to calculate will be in crores. So if I multiply this by crores, I'll get the value in crores. Yes or no? See, this 97.26 is on the face value. This is the face value. Okay, but I need to calculate it in crores. Now how much crores is given? I have to calculate in terms of 10 crores because 10 crores is the face value. So I need to know what is the net proceedings that I get. So if we just simply compute this 0 I can deduct, and this if I just divide this by 10, my value should be 9.726 crores, or I can say 9.73 crores. So that is my net realization, or this is the net amount received by the company on the issue of commercial paper, right? So with this, I complete the concept of commercial paper. In the next video, I will try to cover one more concept of the sources of one of the sources of working capital finance, right? Hope you like this video. If you like this, please press the like button and do subscribe to our channel. Thank you and happy learning.